But nonetheless, central banks will do their darndest. I don't agree with what they've done. I don't agree with doing their darndest. But, you can't fight a central bank. That's been proven over the past few years, and I don't expect investors will try to.
Well, is it going to, I guess the question then, Bill, is twofold. First of all, is it going to work? And secondly, with the uncertainty that this Brexit vote creates, are these markets we're talking about going to trade on fundamentals at all?
Well, they will trade on fundamentals ultimately. The problem I think that the markets have is that most buyers, don't have a sense of the ultimate destructive power of low to negative interest rates. There's never been an example in world history where this has happened, and so they don't have a model. But nonetheless, there's no doubt, and you've heard me talk about it, and others have talked about it, that insurance companies and banks and pension funds are all at the margin slowly going bankrupt because they have liabilities of 4, 5, 6, 7%. Pension funds certainly do at 7.5% to 8%, and to the extent that long-term bonds are in the 1 to 2s, then basically they can't fulfill their liabilities down the road. I have a sense that policy makers will try to make adjustments through rules and deferment of certain types of regulations as we move along. That's how they're trying to solve this debt crisis, with a little bit of magic and then a lot of money. So going forward, is there risk in the market? There certainly is, because negative interest rates ultimately they don't destroy capitalism, but they impair it to the extent that investors are not willing to make a long-term commitment to areas such as insurance companies and pension funds and those companies with longer-term liabilities. And ultimately, investment is at the heart of capitalism, and we're not seeing that, and we won't see that as interest rates stay at these low levels and go lower.